We all know about climbing the corporate ladder, but the real wealth that most people never talk about is not through the corporate ladder, it's through climbing the wealth ladder. This is what the corporate ladder looks like for so many people. You work hard to become an associate, you get promoted to an analyst, you work hard, you become a vice president, you get promoted to a director, and if you keep working hard, one day you'll eventually become an executive, and once you make it here, you're at the top of the food chain, you're everybody's boss, and you made it. Right? Well, kind of, not exactly, because once you make it here to an executive, you still have a boss. Your boss might not be here on the corporate ladder, but your boss is here on the wealth ladder, because when you're an executive for a company, you still have a boss. Your boss is now the owner of the company, because the executives of a company aren't necessarily the owners. The wealth ladder looks like this. You have the workers, then you have the thinkers, then you have the owners. The owners are the ones that control the system, and the owners are the ones that the executives work for. When you work your way up the corporate ladder, what you're doing is you're transitioning from being just a worker to being a thinker, because the executives at a company, they're not the ones that are going out and building things. They're not the ones that are going out and running the cashiers. They're not the ones that are actually putting the work together. They're thinking about what needs to be done, and then they delegate it to the workers here. But what you still have when you're an executive is an owner. Like James Quincy, who is the CEO of Coca-Cola, is the top dog at Coca-Cola. He made $25 million in 2021 because he is the top dog at Coca-Cola. Well, Warren Buffett, who is the owner of Coca-Cola, one of the biggest shareholders of Coca-Cola, he made $700 million in 2021, not as the person who's working at Coca-Cola, but as the person who owns a big chunk of Coca-Cola. And in 2021, he made $700 million in dividends. That's a lot more than the $25 million that the top executive got. And James Quincy works for the owner, and one of those is Warren Buffett. You don't need $1 billion or $1 million or even $1,000 to start doing this, but it requires you to start thinking a little bit differently. When I got started on my entrepreneurial journey, I started off here as a worker in labor. I used to work at weddings. I used to work playing a drum at weddings, and I used to be the person that used to set up the DJ equipment, which means I'd be the person who'd be lifting these heavy speakers, putting them into the truck. I'd be lifting these heavy trusses. I'd be lifting all these lights and lifting all this staging equipment, put it into the truck. I would then have to deload the truck. I'd have to set it up, and this is before we had a whole bunch of dollies because those were expensive. So we literally lifted this with our hands, and it's one of the reasons why I broke this finger right here. But that's what we did. We used to lift the heavy things, put them down, set it up, and then I would get paid a little bit. Back then, I think if it was a good weekend, I was making somewhere between $300 to $600 a weekend for all the work that I put in. I'd be playing the drum, and I would be doing all the setup, and I'd be making the money as a worker. Well, I got a little bit more sophisticated, I learned more things, and that's when I decided I wanted to start my own thing. I wanted to start my own event planning company. So then I go to college and I started this event planning company where now I'm working to put together these events, and I get to keep my share of the profits. I didn't get a salary, but I was the only worker there. Now I'm kind of gradually working my way up here because I'm the one that's thinking of events. I wasn't just a worker, because before I didn't have to think of how do I close deals, how do I find clients, how do I do all this stuff. I was just going there and putting in the work and getting paid. That was the person that I worked with. He was my partner, a good friend of mine. The DJ who was closing the deals, he was the one that was doing all the thinking work. But I was the one that was just going there trying to plug into the system to help build his business. Then I had the idea to start an event planning company where now I'm thinking of how do I create an event? How do I create a party? How do I create a concert? How do I create a show that's going to make money? Then I would potentially try to find people who could then help promote it, help put it together. Now, it wasn't a big operation, but it was making good money, especially for somebody who was in college. And now I was kind of in between here where I'm not an owner where I can just sit back and watch other people do it. I got to be the one putting it together. So I'm putting in the work, but I'm also the one that's thinking about how to do it. Well, slowly I started to learn more, and I realized that I'm never going to be able to scale a business if I'm the only one that's working in a business. Because if you want to be able to build a business that's scalable, that's going to grow, you need to be able to hire people that can work in the business and that can think to grow the business. So then this goes on, I work on multiple different business ideas, and now I'm running something called Briefs Media. We have different newsletters, some that are catered for investors, some that are catered for business owners. The newsletters are completely free. And now I am the owner of the company. I'm a thinker in the company, and I'm also a worker in the company because I'm working to grow the company as quick as possible. I'm not the one that's writing the newsletters. I'm not the one that's doing the day-to-day advertising. I'm not the one that's doing the day-to-day stuff. But what I'm doing is I'm working to grow the newsletter every single day. You've probably heard me talk about it here on YouTube. I've talked about it on multiple interviews that I've been on. And so I'm constantly working to grow the newsletter, to get the word out there for the newsletter. I'm also working to think about how to grow the newsletter. I'm coming up with new ideas to make the newsletter better, to come up with new ideas for new products, to come up with new ways to grow the company. And I'm also the owner of the company where I'm working to make sure everything is functioning well. We don't have external owners. We don't have external investors. We're a small company where now I am kind of a part in all of these, but you can start to see now how the wealth ladder works differently than this corporate ladder, because in the corporate ladder, what you're working for here is just a paycheck. You're working to go do your job and get paid. Now, when you make your way up here to the executive structure, you might get a hybrid where you're getting a salary plus some incentives like a piece of the company, a piece of profits. But for most situations, not all, but for most situations, when you're just working at a company, you're just working to get a paycheck. When I was working in the wedding business, I didn't get any ownership. I didn't get anything like that. I just went and got a couple $100 every time I did something. So I was working to get a paycheck. Then as you kind of work your way up, well, now you got to be incentivized as a thinker to do something that's going to create bigger profits for the company, because those bigger profits help out the owners. But how do you incentivize the thinker to do that? Well, you can pay them a big salary, or you can incentivize them based off of production. Meaning, if you make a bigger profit, you make more money. Now, every company has a different way that they do it, and I've never worked a traditional corporate job, so I don't actually know how other companies do it, besides just what I see from the outside. But the way that we do it here at Briefs Media is we have a revenue share program where when the newsletter does better, everybody makes more money. That way, everybody is incentivized and on the same page to help grow the company, because when we do better, everybody does better. In this country, the big wealth, the real money isn't built through just here. It's through being the owner. Now, this doesn't mean that you can't do this, because there's multiple different ways that you can be an owner, but the real wealth in this country, in this economic system, is built by being an owner, not just by being a worker. Because when you're just a worker, well, now you're paid just by your output. You go to work and you get paid. You don't go to work, you don't get paid, unless you have some PTO, but that PTO doesn't last forever. So either you work or you don't get paid. But now when you're an owner, you're not paid based off of your work. You're paid based off of the output of the company, which has other people working there. And so what you can do now is you need to work to be an owner, not just to be a worker. And the nice thing is you don't have to have a lot of money to do that. And you don't have to have a bunch of time to do that too. Because there's two ways that you can be this owner. You can build this equity by building a company, or you can buy this ownership. And the nice thing about buying this ownership is you don't need a ton of money to start. I mean, you can start with literally as little as $1, but it's a way for you to get started to become this owner, because now you're working here to get paid, and you take some of this money and put it here. That way you can benefit from the way that their economic system works. Now, for those of you who are entrepreneurs, who are business owners, who are working to build your own business, who's working to grow and scale your own equity, the value of your company, I have a free newsletter, like you heard me talk about, called Business Briefs, as a resource for you. The way Business Briefs works is every day you're going to get a newsletter from my team going over what's happening in the business economy in terms of economic trends for businesses, in terms of innovation, in terms of what's happening in the funding markets. That way you can make smarter decisions in your business. Business Briefs is completely free, and it's made for entrepreneurs. So if you want to join Business Briefs for free, I'll put the link to how you can join down in the description below. The thing that gets me so frustrated is that we're all taught just to climb this corporate ladder. Like, we go to school to get good grades, to get a good degree so we could get a good job, and then we're taught to work hard at a job that way we can climb the corporate ladder. That way we can become wealthy. But there's a disconnect there between climbing the corporate ladder and becoming wealthy. Just because you make a big salary does not mean you're going to have a lot of wealth. There's a disconnect there, because you can have a lot of money and spend a lot of money. This is what richness is. I can have $1 million and blow $1 million on a nice house, a nice car, a nice vacation, and all the money can be gone. But if I am making $1 million a year from my investments as an owner, well, now it's a lot harder for me to become broke, because now I can spend all $1 million this year and I got another $1 million coming in next year. That's the difference between a wealthy mindset and just being rich, where you're working to get a big salary. Now, I know $1 million a year is a lot of money, but this is where it's just understanding the difference in mindset, where I don't just want a big salary. I want the big equity. I want the big ownership. I want the big assets because the assets will pay you even when you're not working. This is where you find true financial freedom and true wealth. Now the question again is, how do you do it? Well, I already talked about the different ways. You can buy it or you can build it. Build it is by building your own company, by creating a product, having customers, and then building something that doesn't just rely on you working there, building something scalable. That way you can plug yourself out and put somebody else in. That way you have a real business, because there's a difference between being a solo entrepreneur where you create something and now you're doing all the work, and if you don't work, then your business doesn't get paid. There's a difference between that and building a company where you have people, you have teams, you have processes, you have systems, where now you are a part of it, and you might be working here or here, but you can take yourself out and put somebody else in. Now, not everybody is going to be able to just do that right away because it costs money to be able to get there. And most of us have to start by working in the business to grow it. That way we can grow to here. That way we can hire people here. That way we can eventually get there. That's how most of us get started, is you're going to have to start by doing everything and then work to scale your way up. But it's understanding the way you think. And if you want a resource on how to think that way, there's a book called Built to Sell, Building a Sellable Business. That book is great when it comes to going over how do you build this business that's sellable. These opportunities did not exist 10 or 20 years ago. This is a new opportunity which allows you to start investing your money much sooner and with much less headache. And so now this is where the opportunity is there, but it requires you to, one, have the cash and also be educated to actually take advantage of the opportunity, because the downfall is that with all the accessibility also comes with more risk. Because now when people see that, oh, I can just start trading money with $1,000, great. Now people start trading money. Then their brokerage account says, hey, how about you don't trade with $1,000? How about you trade with $3,000, thanks to the help of margin and debt? And how about instead of just trading stocks and buying stocks, you start making more risky trades? And how about instead of doing these risky trades, you start doing options? We'll let you use some of our money. Now people start doing trading options. They start doing more risky things because they don't know what they're doing, because they think that they're going to be able to make a ton of money because they saw somebody on Instagram or YouTube or TikTok talk about how you can double your money with options or these risky trades. And then they start doing that. Now, not only could you lose your $1,000, but now you're in the hole $3,000, and now you have to pay the money back plus interest, and now you feel like you're stuck. You feel like everybody's out there to screw you over. You feel like the markets are scams. You feel like everything is this distrusting thing. But this is where you have to have the tool with the right education. I say the same thing about credit cards. Credit cards are a tool. If you don't know how to use a tool, it will skin you alive financially. If you know how to use the tool, well, it can give you a bunch of free perks and rewards and points just because you use a credit card. Like in the beginning, I never used a credit card because I heard Dave Ramsey and everybody talk about the risks of credit cards and this and that. And I love Dave Ramsey. He is absolutely great. He is a great teacher, especially if you're in debt, to learn how to use your money. But what I learned later on is that I know how to use my money. I'm never going to spend more money than I don't have because my mind is disciplined in that way. And I was throwing money away because if I have to pay something that's going to cost me 10 grand, if I use my credit card, well, I'm going to get some money back just for using my credit card instead of a debit card. A credit card is just a means of transaction. A debit card is just a way that you transact. Now, a credit card, if you don't know how to use it, is going to now cost you a whole lot more because you're going to borrow money that you don't have, and you're going to have to pay a crazy interest rate on that. But if you know how to use your money, well, now you have the financial education and the tool, and now you can get a lot of benefits. Like my credit cards pay for my flight upgrades, they pay for my hotel upgrades, they pay for my car upgrades, they buy me free vacations. It gives me a lot of stuff just because I spend my money through a credit card instead of a debit card. But this is where you have to understand the tool is just a tool, and you have to be able to use the tool with the right financial education. All these new investing apps are the tool. They allow people, they allow you to invest your money with very little cash. That's great. But this is where you need to now have the tool with the financial education, that we know how to use the tool the right way. And this is where I hope my videos can help provide that financial education, that way you know how to invest your money the right way. Because now, yes, you need to start investing, but you want to make sure you're investing your money the right way. And the first thing you want to understand is the difference between trading and investing, because traders can make a lot of money in a boom, but they also are the first to lose all their money and more when you see a bust. Investors are the ones that see the slow, steady, wealth creation over the long term, but this requires you to be much more patient and to sacrifice some of those short-term gains. That way you can see the long-term wealth. Here's something that they'll never teach you in school. Let's assume that you're an investor and you're investing your money into this company A. And company A makes $1 million a year in revenue, and they are left with $200,000 a year after their expenses, meaning they have $200,000 a year in profits. But if you dig a little bit deeper into company A, what you see is that they have two different divisions. They have division 1 right here, and then division 2 right here. Two very different divisions. However, division 2 makes up 80% of the revenue, and division 1 makes up 20% of the revenue. And then if you dig a little bit deeper, what you see is that division 1 has half of the employees and half of the expenses. So this is 20% of the revenue, but 50% of the expenses. And division 2 is also 50% of the expenses. So now if you are an investor, you're looking at this saying, division 2 is bringing in most of the revenue, and it has the same number of employees, the same amount of cost, the same expenses as division 1, which is bringing in just 20% of the revenue. So you're spending, if you have $800,000 a year in expenses, $400,000 of expenses here, $400,000 worth of expenses here. You're spending $400,000 here to bring in 20% of the revenue, but that same $400,000 of expenses here is bringing in 80% of the revenue. Now you as the investor are seeing this and saying, we got to do something here, because you don't get paid a salary, you get paid based off of the profit as the owner, right? You're getting a profit share, you have the valuation of the company, the bigger the profits, the more the company's worth, so you want to have bigger profits. So you might say, you know what, we need to let go of the people here, we need to get rid of this division, that way we can focus here. Because if you were to fire everybody here and you were to shut down division 1, well now all of a sudden you have increased the amount of profits that you have in the company, because now you have $400,000 worth of expenses and only 80% of the revenue, which is $800,000, which means if you get rid of division 1, which is this money pit, you will now have $400,000 a year in profits, because now you got rid of the money sucking division. You got rid of the things that were not working. And so this now is the mindset of an investor, where now you are trying to find out the most efficiencies, the most productiveness, and you want to have the best allocation of your capital. You want to put your money to use in the best place that's going to give you the biggest return. If you're investing in a company in the stock market, if you're investing in startups, if you're investing in real estate, if you're trying to build a company, you want to see an increase in your profits and you want to see a growth in your valuation. But now let's flip things up just a little bit. And let's assume now that you are not an investor in company A, and rather you are a worker in company A. And a little bit more specifically, let's assume that you work right here in division 1. And so now you're working every single day to get a paycheck, you're doing whatever the job requires, and you think you're doing a good job. And then all of a sudden, one day, you go to work, and then you found out that you're getting fired. Now, your smile is going to go from this smile to a big frown. Why? Because you were relying on this paycheck. You didn't really have much risk besides the job being lost, because now you don't have to invest any money, you don't have to go into debt to build the company, you don't have any personal loans to build the company, but you were relying on your paycheck to live your life. And now what happens? Well, this paycheck just went away. And now you have to go out and find another job, hopefully soon, because you have expenses to pay, you got your mortgage or your rent, you got your car payment, you got your kids to feed, you got to pay for everything else. And now you're the one that's struck, and now you're hating the company because you're saying, why would you let me go? The company was mismanaged, it wasn't run well, and now you're out trying to figure out why the system keeps trying to screw you over. And this is where now you have to think a little bit different and understand where school lacks. School teaches you to be an employee. Now, this could be any type of employee. It could be a manufacturer, this could be an accountant, this could be an executive. I mean, this works along the whole spectrum of employees. School teaches you to be an employee. It teaches you to be a worker in a company. Now, there's nothing wrong with being an employee, but you have to understand how the system works and what school teaches us, because there's a difference from just being an employee to being an owner in a company. Whether you hate it or whether you love it, this is how our economic system works. The way our system works, it is designed to benefit the people who own and invest in the companies. Not just the system, but our laws are also made that way. There's something called fiduciary duty. Fiduciary duty means that the people here who run the company, the executives of a company, their duty is not to take care of the customers. Their duty is not to take care of the employees. Their duty is to take care of the shareholders, the investors of a company. So what the executives are trying to do is they want to maximize this. They want to maximize growth, they want to maximize profit, and they want to maximize the valuation of a company. The valuation means how much a company is worth. The more the profits or the more that a company is growing, the more that a company is worth. And so in this system, the people who are benefited the most are the people who own a piece of the company, not just the workers. Now, when you are a worker, you get a paycheck. You're guaranteed a paycheck. You go to work, you get paid. As the investor, you don't get any guarantees. You invest your money here, hoping to see a return, but there's a chance that your investment will go to zero. There's a chance that you'll make no money in returns. There's a chance you could see huge returns. So you have the potential to make a lot of money, you have the upside return potential, but you also have the risk of losing everything. And so to compensate for the risk, you have the upside potential. And this is where now you have to understand the system and not just rely on your salary and understand how you can use the system to your advantage. This doesn't mean that you have to go out and start your own company. Because the reality, I've learned this the hard way, because I used to think that anybody could start a business, so I tried to push a lot of my friends to go out and start a company, and then I saw some people just were not cut out to build a business. Not everybody is meant to be an entrepreneur, not everybody should be an entrepreneur. However, in America, in this country, the way that our system is run, everybody needs to be a business owner. Now you might be hearing me saying that and say, Jaspreet, what do you mean? You just said not everybody should be an entrepreneur, not everybody should start a company, but everybody should be a business owner? Yes, because you can be a business owner without operating and managing the company. But there are so many different ways to do this. Obviously, the most simple and most accessible way is just by investing your money into a company on the stock market, because when you do that, you're investing in the company, and now you have a piece of the equity. But now what are you doing? Now you want to see this system work. You want to see the profits grow. You want to see the efficiency grow. You want to see the value of the company grow. And as that happens, you get benefited. And in this system, this is how it works. Now you can hate it, you can love it, but the emotions are really irrelevant. The reality is this is what happens day in and day out, and the people that understand this become incredibly wealthy. The people who understand how the system works make so much money because they understand the system. It's not emotional. They just understand what's happening, versus the people that kick, complain, cry, scream. They're the ones that get screwed over by the system day in and day out. And it's very unfortunate because most of us are never taught this. I was never taught this. No one told me this going to school. My parents are immigrants from a state in India called Punjab. I never had any sort of entrepreneurship education. I had no sort of investing education. These were things that I had to learn the hard way, by making mistakes, by losing money, by screwing up, by trying things, by doing things. And this is where I want you to understand this is how the system works. School teaches you to be an employee. It teaches you to work at a company to help the company grow. See, when you work at a company, you're working to help the company produce this product. That way it can ultimately grow its profits. That way it can ultimately grow its valuation, which benefits the shareholders. Sure, you benefit as well. You get your paycheck, you get your salary, maybe you get some benefits, you get some healthcare, maybe you get some PTO. But at the end of the day, the person who wins the most in our economic system isn't just the worker, it is the owner. Now, as the owner, you take on the most risk because there's a chance that things will go to zero. There's a chance that the economy will fail. There's a chance that we're going to see a recession. There's a chance that all these things can happen, which can hurt the value of your investment, which means that you can see your investment go down to zero. However, there's also a chance that the opposite happens. There's a chance that you could see your investment 10x, 20x, 100x, which means that you have no upside to how much money you can make, but there's a downside that you could lose all of your money and more, depending on if you're using debt or not. And this is where now you want to strategically use the system, which means, yes, you don't have to go out and start a company if you are not an entrepreneur. Entrepreneurship is great. If you feel like you had the entrepreneurial bug, then by all means, go out and start a company, learn, make the mistakes, and try it. But if you don't have the entrepreneurial bug, that's okay. Go work for your company. Do the best that you can to be the best worker for your company that you can to provide the most value. That way you can work your way up in the company as long as you do something that you love. If you hate the company, then look for something that you're actually passionate about. Do something that you enjoy doing. But then when you earn your income, take a piece of your income every time you get paid and invest it. That way you can own a piece of the production. Whether it's investing in the stock market, whether it's investing directly into startups. There's new platforms out there like Republic is one, where now you can invest in startup companies with as little as $100. They're not paying me to say this, it's just one example of a platform where you can invest in these types of startups with very little money, and now you take on a lot of risk because most startups will fail, but you're investing in companies at a very early stage. And if you can invest in a good company that does not fail and that gets acquired or that goes public, well, then you can see huge returns on your money. So it's just understanding risk versus reward. You can invest in real estate. If you don't want to go out and invest in physical real estate, you can invest in real estate funds. All these things are now accessible thanks to the internet, and you can start investing with literally less than $100. And it's changing the way that we use our money, because we are taught to go to school, get a degree, get a good job, and then if you do that, you will become financially successful, or you'll just become successful, and we assume that means financially successful. But just because you have a good degree doesn't mean you're going to be financially successful. I can tell you this because I went through law school, but I don't practice as an attorney because it's not worth my time financially, and it's not my passion. I like doing what I do now. I like running market briefs. I like running the companies that I'm doing. I like this more than I would like reading a whole bunch of contracts and doing a whole bunch of law work every single day. It's just not my passion. It doesn't get me excited. Now, I have met some attorneys. Some of them are very boring people, but they love doing that. And they're very good at it. And this is what they live for. And those are the type of people that I want to hire as an attorney. People who are actually passionate, who like reading legal cases, who wake up thinking about the law because this is something that they enjoy. And yeah, it's going to sound weird, but some people actually enjoy that. And this is where now you got to understand, when you're working for the paycheck, you got to think a little bit different, because we live in this consumerism culture where it is very normal to spend every dollar that you earn and more thanks to credit cards and buy now, pay later and home equity lines of credit and all these different tools which allow you to spend more money than you have today. And what are you spending this money on? It's not on an income producing asset. It's not something that's productive that's going to make you more money. It's a liability. It's a Gucci handbag. It's a Louis Vuitton. It's a vacation. It's going out and living this fancy lifestyle so you look rich, which in reality, all it's doing is it's making everybody else around you rich, but it's keeping you broke. Because every time you spend $1 on something that's not making you money, it's making somebody else rich, but it's keeping you broke. When you have the BMW, when you have the Gucci, when you have the Louis Vuitton, when you're going on the vacations, all these things are nice. They look good on social media. You get to post on Instagram. You get to tell all your friends. You got to do all this cool stuff. You spend thousands of dollars and it's fun, but it's not making you any wealthier. It's making the companies wealthier. Every time you go out and buy a BMW, it's making the BMW company richer. When you go out and buy a Gucci handbag, it's making Gucci rich. When you go out and buy some Louis Vuitton, it's making them rich. When you buy some Lululemon, it's making Lululemon rich. When you have the newest AirPods and the newest iPhone, it's making Apple rich. But it's not making you rich, because none of these things are putting any money in your pocket. Now you can flip the script and you can invest in the Apple Corporation. You can invest in the Lululemon Corporation. You can invest in all these different companies, but it's a different mindset now, where now you're working to own a piece of the company instead of just being a pawn in the system that's working to get paid to make everybody else around you rich. And this is the thing that school will never teach you, because school is designed to breed employees. Now again, there's nothing wrong with being an employee, because being an entrepreneur is hard. It's not for everybody. It's just like being a doctor is hard. It's not for everybody. There's nothing wrong with being a doctor. There's nothing wrong with being an accountant. There's nothing wrong with being an attorney. But you got to figure out what is the right career path for you. But then understand that no matter what you become, you have to be an investor. Our system benefits investors and business owners more than anything else. And if you don't want to start a business, that's fine, but you have to be an investor. You have to be a business owner. Even if you don't want to be in the business of operating a company, you have to be an owner of a business. And when you do that, not only do you get the financial upside, you also get the tax upside, and you also get the legal upside. And this is where now you have to understand how wealthy people function in this country, because when you understand the system, again, I'm saying this like this because most of us are never taught this, but when you understand the system, you have the opportunity to make a ton of money. You have the opportunity to become insanely wealthy, but you have to understand the system. That way you can use it to your advantage instead of just watching everybody else do it, instead of just watching everybody else get rich. That way you can benefit from the system, because once you do that, now you can take better care of yourself. You can take better care of your family, you can take better care of your community, and then you can help spread the education. That way you can win in this economic system, because education is meant to be spread. And in this economic system, if you don't understand the way the system works, well, you're just going to continue to be screwed over by the system. And we see it happen again and again and again, because it's profitable to keep people broke. It's profitable to keep people financially poor. But if you don't understand it, you're just going to continue to be stuck in it, and you're going to continue to hate it. But once you understand it, that's when you understand that the system is emotionless, and you can understand how to use the system to your advantage. Now, of course, if you want to dig a little bit deeper into the actual investing side of how do you actually invest your money, put it to work, even if you don't have a ton of money, me and my team put together a free ebook on passive income, and you can read it for free. All you got to do is click the link down in the description below. But this is where it's taking the first step of learning, and understand that your education does not end at school. It just starts at school. And now once you have that degree, understand what that degree gives you. Maybe it gives you some status. Maybe it gives you some nice art for the wall. Maybe it gets you into the door at a job. But that's not where your financial education and your financial success ends. And this is why so many people who are high income earners, people like doctors who are making hundreds of thousands of dollars a year, are still broke because they have no idea of how to use their money. You think, oh, I'm making a few $100,000 a year, I'm set. But now you got to have the doctor lifestyle. I'm telling you this from experience, because I was supposed to be a doctor. My parents really wanted me to be a doctor. When they found out that I wasn't going to be a doctor, they said that I have to at least go out and become an attorney if I want to maintain any pride in the family, because they didn't understand this financial education at the time. And so that's what I did. I became an attorney, but I never worked a day as an attorney. But I know a lot of doctors. And I can tell you that just because you make a big salary doesn't mean you're going to be rich. And so, you can make hundreds of thousands of dollars a year and still be broke, because now once you make that doctor salary, you want the doctor lifestyle. You need the doctor cars. You need the Range Rover. You need the Benz. You need the doctor home. You need the mansion. You need the doctor vacations. You got to have the doctor lifestyle. And now all of a sudden, yeah, you make a big salary, but your expenses are right up there with you. And that's why there's a lot of doctors who are living paycheck to paycheck. I was just reading a study. I forget who published this. But it said that about 50% of Americans making over $250,000 a year are also living paycheck to paycheck. It's not how much money you make, it's what you do with the money you make. And once you understand how to use the money you make, that's when making more money has the biggest impact and the most power, because now that you know how to use your money, you can earn more money and know how to use it to make you wealthy instead of just making everybody else around you rich. And this is where you have to start by understanding the system. Understand that, okay, school taught me to be an employee, but wealth does not come from being an employee, no matter what type of employee you are, whether you're making hundreds of thousands or tens of thousands of dollars a year. Now it's understanding how to use your income from your job, put it to work to capitalize on our system. That way you can actually build true wealth over the long term. So the last thing that I want to mention is that this true wealth doesn't happen overnight. It's not something that happens in 6 months or 12 months. It's something that happens over the long term, where you consistently keep investing your money. Anytime you get paid, make your investments like an expense. Make it like a bill, where every time you get paid, you have to pay yourself first. You want to put some money aside for your investments, whether it's stocks, whether it's startups, whether it's real estate, maybe it's cryptocurrency. It doesn't matter what the investments are. You got to believe in it, and you have to understand the investment. I have tons of videos on my channel where I talk about how to invest. You can check out my ebook if you want to learn more. But in that actual how to invest, that's a different topic. But now when we talk about actually planning to invest, that's where you want to consistently keep investing a piece of your income every time you get paid from here on out. That way you can truly build this wealth over long term, because real wealth is compounded and built in silence, while that richness is flashy and loud, and it also leaves very quickly. Now you want to pay and invest in a good tax advisor, because they're going to help you document everything. They're going to help you understand everything. They're going to help you manage everything. And there's a huge night and day difference between a good tax advisor and a bad tax advisor. I can tell you this from personal experience. And so my goal with this will be to help bring good